Welcome to Matters Financial and Geopolitical from the Frontier. I'll tell you where I was yesterday momentarily. Let me start with the fear index. The VIX jumps above 20 again as sentiment in US stocks is confused following the Fed meeting. Chaos in DC and sell-off in banks add to the confusion. That's from Holger. We'll touch on that. There's plenty going on. Obviously, a tariff war has broken out, and the president has changed his national security advisor. So we'll touch on that momentarily. Let me start with some home thoughts. I was in Kampala yesterday, Uganda. The drive from Entebbe to Kampala obviously resonates and harks back to that flight triggered by Idi Amin. But today it's a hive of activity, even around 8:30 p.m. when we were coming in, and then we get stuck in traffic for 30 minutes. We didn't move at 9 p.m. Quite extraordinary. This is a photograph of the morning, because we came in the morning, and finally we left. I left yesterday evening, and this is a photograph of the sunset at the airport. The walk of life. I hope that the serenity and power of this image will allow it to stand the test of time. David Yarrow, who takes these fantastic photographs, many of them here in Kenya. This is particularly of elephants. And then, if so, give credit to the elephant, not me. To quote John Donne, nature's great masterpiece, an elephant, the only harmless great thing. Tsavo, of course, where I suspect he's taken this photograph, unless it was in the Amboseli, is home to approximately 12,000 elephants, 1/3 of all the elephants in Kenya. Here, the Madunda Rock is a 1.6 kilometer wide stratified rock that collects water and attracts hundreds of elephants and wildlife that come to drink there. This is from Think Traveling. This is my Twitter link for all my comments about Tsavo. Obviously, it captures my imagination, to be frank. Huge, wide open spaces. You're typically on your own, no one else there. There's some grandeur about that. And then these gigantic elephants come out of the red dust. Look at this video we did when we went to Tsavo West. We were at Finch Hatton's. We drove to Mzima Springs. It was getting dark. You'll have to watch it for about 4 minutes before you get to the point. The point being, suddenly we were surrounded by elephants in the half light. It was quite remarkable. And then this is sunrise. I missed it, but Rufus kindly went to shoot a herd of elephants early in the morning at Finch Hatton's. It was just teeming with elephants, that visit. And finally, this photograph by Pinke Feder. Nothing behind me, everything ahead of me, as it ever is on the road, is my quotation, but it's on the road in the Tsavo. This is the new cover of Time magazine, and that took me back to Youthquake, which was the word of the year, defined as a significant cultural, political, or social change arising from the actions or influence of young people, has been selected by Oxford Dictionaries as the 2017 word of the year. And I was talking about it during the UK snap election, when I said the youth vote, which slept in during Brexit, then woke up for the UK snap election and nearly carried Jeremy Corbyn into 10 Downing Street. And it is a force to be reckoned with, and I think people like Trump are underestimating its strength. When he drives his own Hyundai from Damascus to Ghouta under the most dangerous circumstances, it means a complete trust in his people, his army, and his country's inevitable victory. Fares Shahabi. And this is the footage that President Assad took of him driving through Damascus, going to Ghouta, and then speaking with his military. And what I was saying was that, the Syrian presidency has been quite effective at making sure their signal can be heard through the hysteria and the noise, quite often propaganda. This drive-by being a good example. EU leaders side with the UK and say it's highly likely that Russia was behind the nerve agent poisoning in Britain of a former double agent. You've really got to be a student of linguistics. Highly likely is not beyond a reasonable doubt, clearly. The United Front was revealed in a tweet from the EU Council President Donald Tusk, who said the bloc agrees with the UK government that highly likely Russia is responsible for the Salisbury attack and that there is no other plausible explanation. On that note, it's interesting that, at the same time as this spat was happening, the Russians came to the Eurobond market in London and raised $4 billion in a Eurobond sale. And the point is, British savers were a big buyer of that Russian Eurobond. It raises a broader question about what investment funds do with their money, said Richard Connolly, a lecturer at the University of Birmingham, focusing on Russia's political economy. If the yield is good, the money will find its way there. It's such a difficult question for anyone to address legislatively. Now we've got the exciting prospect of the appointment of John Bolton as Secretary of State. He's called for war with Iran and North Korea, amongst others. Pompeo, of course, has attacked the Iran deal relentlessly. The writing is on the wall, and Trump is making a hard turn in the direction of conflict, insecurity, and global isolation of the United States. That's Ben Rhodes. John Bolton, Trump's pick for National Security Advisor, has a record of warmongering, bigotry, pushing conspiracy theories. Have a listen to this video from MMFA. And essentially this is a very hard turn, and it puts the Iranian deal in complete peril. Here are all the officials who have left the Trump White House. Take a look. I wasn't here yesterday, but as we know, Putin and Trump apparently have agreed to instruct Lavrov and Pompeo to begin preparations for a Russian-US summit as soon as possible. That's Peskov. In this photograph, His Royal Highness Crown Prince MBS meets with the US Senior Advisor and Envoy on the Middle East and Special Representative for International Negotiations. Essentially Kushner. Then there's a report that the Saudi prince said Kushner is in his pocket, which makes you wonder, and I wondered who is in whose pocket. You'll remember in November 2017, I was writing last week after being coached into the early hours by Ivanka Trump's husband, Jared Kushner. MBS launched his Night of the Long Knives. Apparently, this was top secret information which Kushner released to the Crown Prince. Alwaleed, I'm sure, is pretty interested in that. Alwaleed, however, says it's business as usual and he's got no hard feelings. He doesn't have a choice, does he? Israel-bound airliner enters Saudi airspace for the first time. That is a big deal. I've got China falling apart, the Australian casino businesses missing budgets by big amounts. I've got Maria Carey breaking up with me, James Packer. His father, Kerry Packer, was a very interesting and larger-than-life character. There's a famous story of him being in Las Vegas and seeing all these gorgeous dolly birds around an individual. And he says, who's he? And they say, oh, he's a Texan oil billionaire. And he says, how much is he worth? Oh, about $50 million. And he walks over, big fellow, and he says to the man, I'll toss you for $50 million. The man went and he scooped up the girls, apparently, is the story. Social media is like a boomerang the West threw at other countries to change their political order, only for it to fly back and hit it in the face, Carl remarks. Gaddafi's ghost haunts Walking Dead King Sarko. NATO's 2011 war on Libya was unanimously sold across the West as a necessary humanitarian operation against the proverbial evil dictator, Hillary Clinton. We came, we saw, he died. Russia and China were firmly against it, says Pepe Escobar. Now, in a stunning historical reversal, the ghost of Colonel Muammar Gaddafi seems to have come back to haunt former President Nicolas Sarkozy, the self-described superstar of that R2P responsibility to protect spectacular. Sarkozy apparently has been the target of no fewer than 10 different investigations. So far, 7 of them still ongoing. Evidence in this case does exist. Among other explosive pieces, an official Libyan document obtained through an investigation conducted by the French website Mediapart proves Gaddafi handed over no less than 50 million euros to Sarkozy's campaign. Turns out it's the colonel that may have actually made the foe king. I wrote a piece in October 2011, Gaddafi's body in a freezer, what's the message? And I quoted his famous quote, I tell the coward crusaders, I live in a place where they can't get me. I live in the hearts of millions, he said. Indeed, Sarkozy can't get him. International markets tariff talk is spooking the market a lot, clearly. US dollar yen tanked. Last trading at 105, we'll come back to 105, we were at 104.60 if I'm not mistaken at one point, but really it's a safe haven, right? So it's a reflexive Pavlovian reaction that happens in times of uncertainty. The US 10-year yield fell to around 2.8%. You remember at one point it was close to going through 3. Latest on trade, Trump orders tariffs on at least $50 billion of Chinese imports. China hits back with tariffs on $3 billion of US imports. Asia stocks fall after sliding US shares. China apparently is hitting the US where it hurts, in the pork belly. Facebook shares are down 11% so far this week, on track for their worst week since August 2012, and the 5th biggest weekly fall since the company floated in May 2012. They closed on Thursday at $164.89, down 2.7%. The S&P was down 2.5%. Facebook closed on Friday at $185.09. As more than 2 billion monthly active users made almost all of its $14.6 billion in revenue last year from advertising. March the 21st, I stayed bearish, notwithstanding the sharp slide, and said sell it. I said it remains a sell. I think Zuckerberg is completely out of his depth in the scale of the issue he's dealing with and his ability to deal with it. This is the Facebook share price chart from Roddy Campbell. I remain a seller at least 150. Hits-wise, says delete Facebook searches are up over 400% since Sunday. Steve Bannon talking about Cambridge Analytica says Facebook data is for sale all over the world. I go back to the 5th of December 2016 when I wrote, we have a deviate tomahawk. UK unemployment is at 4.3%, matching the lowest level since 1975. UK average weekly earnings up 2.8% year on year, the most since September 2015. Let's move on to the currency markets. The euro is at 123.22, dollar index 89.62. Japanese yen, which earlier this morning was at 104.81, is now at 105, the figure. Swiss franc 0.9454, the pound, which is continuing to strengthen, it's now at 141. Earlier this morning was at 141.15. The Australian dollar 0.7722, India rupee 65.175, South Korean won 1080.74, Brazilian real 331.55, Egyptian pound 17.6215, South African rand 1184.69. Dollar index took a leg lower as history weighs when former US President Bush raised import tariffs on steel in 2002. This hurt the dollar, says Holger. JP Morgan in terms of the dollar, as long as key support of 88.88 holds in the US dollar, they will stay constructive. Euro dollar last trading at 123.21, 125.60, which seems some ways away, but we've been up there a few times, is the cap. 10-cent shares have run up 60,000% since its 2004 IPO. Naspers has finally decided to take a little off the top of its $175 billion stake. They're selling about 2% of the stock equivalent. They bought their entire position for just $32 million in 2001. When Tencent was an obscure web firm in a nation where few people use the internet, it's now worth $175 billion. Their stake, I mean. Naspers might have remained a little-known publisher of South African newspapers and operator of pay TV services, if not for the decision to invest in Tencent. While the investment has made Naspers the most valuable company in Africa, its market capitalization of about $122 billion lags well behind the value of the Tencent holding, suggesting investors assign no value to its other businesses. By doing this, Naspers will be able to reduce its borrowings, grow its own portfolio, and slowly start reducing that underlying discounts in money manager Rod Kilpin and Kratos Capital. Tencent shares poised for the biggest two-day drop in 10 years. Spoofing, front-running, wash trading, pump and dump, insider trading. There's a question of how are they being watched out for? This is about the cryptocurrency markets, exactly. WTI crude oil, of course, going up on this appointment of John Bolton, the notorious regime changer. $64.94 last. Lee Sachs algos clearly using Bolton as an excuse to run through stocks because all the other bombshells that were dropped on nixing the Iran deal weren't enough. Gold last trading at 1340, so that's getting revved up as well. Emerging markets were down more than 3% yesterday, that's according to JS Blockland. Paul Kagame, this is just not a signing ceremony. Today's deliberations are critically important as we chart the next steps on our journey towards the Africa we want. This is about the Africa Free Trade Zone. Zambia handed First Quantum Minerals a $7.9 billion tax bill. First Quantum received a letter from the Zambia Revenue Authority dated Monday noting an assessment for import duties, penalties and interest on consumables and spare parts. South African nation accounts for 84% of its revenue. The company unequivocally refutes this assessment, which does not appear to have any discernible basis of calculation, and will continue to work with the ZRA as it normally does to resolve the issue. The domestic optics seem to be all around putting out more and more outlandish claims, so we might even think it's a shakedown. Zimbabwe's new president chalks up $4.2 billion in deal. Caro Resources will spend $4.2 billion on the Zimbabwean platinum project, and the first big investment since President Robert Mugabe's ouster. It's not business as usual anymore, the president told reporters on Thursday. Things have to change. South African oil shares down 3.83% here today. Dollar versus rand, as I've said, buy it above 12, looking for a move below 11. Nigerian oil share up 8.87% this year. Ghana may sell the first African samurai bond since 2001. Oforiate will meet Japanese officials, investors and lenders from April 9 to 14 to discuss debt issuance and to finalize a bilateral investment treaty according to a document seen by Bloomberg. And the people who asked not to be identified because the matter is private, a samurai issuance by Ghana will be the first from a government on the continent since South Africa sold 90 billion yen in 2001. Ghana's stock exchange is up 27.49% this year. Let's move on to Kenya. Raila beats rivals to a new deal, says Africa Confidential. The opposition is in disarray after its erstwhile leader signs a surprise agreement with President Kenyatta. It was a most ambiguous of handshakes, they say. It served a clear enough purpose. It dampened down the confrontational political mood and boosted the economy. Within hours of the handshake, the shilling strengthened and the Nairobi Stock Exchange Index edged higher. Well, it's at a record every day this week. The governing Jubilee coalition choreographed it expertly. The optics, two smiling rivals now apparently reconciled, pointed to a grand new political arrangement, even if none of the practical details were spelled out. 2 hours after the handshake, the United States Secretary of State, Rex Tillerson, landed in Nairobi. Any questions he may have had about political reconciliation and national stability would be met with that day's headlines, the big handshake. Under the terms of the deal discussed, we hear that Odinga will have a plush government office at Jogo House next to Kenyatta's set up at Harambee House, the obligatory ministerial Mercedes 500 with security and motorcycle outriders. Saying it's also freed him from pressure from his top three associates in the opposition, NASA, Wycliffe Musalia Mudavadi, Stephen Kalonzo Musyoka, and Moses Simiyu Wetangula had been secretly negotiating an alliance with Kenyatta in their own right. They also repeatedly threatened to defect from NASA unless Odinga renounced all ambitions to run for the presidency in 2022 in favour of one of them. As a top Odinga advisor told Africa Confidential, now he has beaten them at their own game and caught them by surprise. They were joyriders in a rider-driven party. Saying the biggest losers are Mudavadi, Musyoka, Wetangula. The once sure of its position close to Jubilee, ODM began to distance itself from NASA, removing Wetangula's Senate Minority Leader on March 15, replacing him with James Orengo. The trio now say that they want to negotiate their own agreement with Kenyatta, but for now they are marooned politically. Yet, as often happens with Kenyan politics, that could all change next month. My piece on the 12th of March dealt with this exact issue. It was called the rapprochement. If Kenya did get a loan to build a railway, or vice versa, asked The Economist. When Kenya launched its new railway last year connecting the coastal city of Mombasa to Nairobi, passenger tickets sold out. Travelling between the two countries' two biggest cities overland had meant crowding into a bus for 12 hours, or riding the old British-built railway, which might have taken 24 hours. The new line, run by Chinese engineers who wander up and down the carriages, has cut the journey to between 4 and 6 hours, depending on the number of stops. The seats are comfortable and at just 700 shillings affordable. Lucky passengers see elephants along the way. Shuttling passengers, however, is not what the new line was built for. When Kenya borrowed $3.2 billion from China for the railway in 2014, the aim was to move freight efficiently between the capital and the port of Mombasa, 484 kilometers apart. Unlike the passenger service, the cargo one has been a disaster. The second train out of Mombasa arrived a day late because it didn't even have enough goods to leave the port. Passengers may find the biggest elephant on their journey is the white one they are riding. In 2013, the World Bank said that new railway would be feasible only if it were able to move at least 20 million tons of cargo a year, just about everything that goes through the port. At best, the new line will transport half of that. Some fear that it might not make enough to cover its running costs. If the authorities then skimp on maintenance, the railway could deteriorate quickly. Before the new line, Kenya already had a functional railway, the old British one. In the 1980s, it moved about 5 million tons of cargo a year. It could have been refurbished for perhaps a quarter of the cost of building a new one. But that would not have come with a big Chinese loan or the cash that was splashed out on subcontracts and the land purchases needed for the new line. Some cynics in Nairobi said that building the railway was a way to get a loan rather than the other way around. Now let's look at some earnings that come out of the Nairobi Stock Exchange. Let's start off with Dr. James Mwangi's Equity Group, which reported first full year 27 earnings per share increased 14.155%. Their holdings of government securities clocked 128 billion, up 27.252. Customer loan book was up 4.895% to 279 billion. Total assets 524.46 billion, up 10%. Government securities income, obviously that was going to be up 69.925%. Full year operating income was up 1.763%. Their loan loss provision was against the grain because they cut the provision as opposed to everyone else who's typically was slightly higher, down 48.367%. Total operating expenses down 2.115%. Full year profit before tax up 7.845%. Full year profit after tax up 13.947%. Earnings per share up 14.155%. Dividend per share unchanged 2 shillings. They're obviously conserving cash because of the new IFRS 9 regime. Kestrel said net interest margins at 8.5% were higher than our estimates of 8.2%. NPLs declined from 7.4% to 6.3% in Q4 2017, a notable improvement, especially if you look at the trend in NPLs going up to even February 2018. If you're interested in the press release, that link is on Rich Wrap-Ups. If you're interested in the investor presentation, that link is on Rich Wrap-Ups. James Mwangi, we believe that the future of banking is predictive capability, and this is where we have set up our eyes as a group, he said. Equitel transaction volumes grew by 11% year on year. Equitel transaction value grew by 32% year on year. Regional businesses, Uganda profit before tax grew by 88%, Rwanda by 76%, DRC by 55%, South Sudan by 107%. Strong. A double-digit growth across the subsidiaries with an increased contribution of PBT of 14% from 8% year on year. Have a look at this from Rich TV Africa, giving you the results in a pictorial image. Added 1 million customers in 2017, total customers at 12.1 million. 96% of all transactions are outside the branch. My conclusions. The pivot to government securities tapered the NPL ratio by 430 basis points, apparently. Subsidiary contribution is set to accelerate further, in my opinion. They will probably move very quick once the caps are modified to liquefy what remains a key franchise of the bank. These are, in my view, strong results which promise much. And I leave you with the comment that Dr. Mwangi left us with. 2018 is promising, and hence we're very optimistic, this year, he said. Let's remove or scrap the regulation. There's nothing to think about. We all know it's headed in the wrong direction. Talking about the rate cap. He also said that he has $2.1 billion for lending once the rate caps are removed. Standard Chartered reported full year 2017 earnings. The share price is up 3.846% year to date. Let me take you through their numbers. Profit before tax was down 24.208%. Profit after tax was down 23.595%. Earnings per share down 24.023%. Dividend, they marked down 15% to 17 shillings a share. But that's worth 7.87% in yield terms on the current share price. Underpinning it, it's had a big move today. Look, those results were significantly better than everyone expected because Standard Chartered had been very conservative and warned, but had issued a full year's profits warning, and people were expecting it to be around the minus 30% range. Kenya government securities, they've got 103.48 billion. The loan book to customers grew just 2.92%. Total operating income was down 2.312%. Loan loss provision, they increased by 90.262%. You see, that's against the equity. You compare that to equity. You already know the core numbers. Earnings per share was down 24%. So the dividend is worth 7.87% on the current share price. They had warned last year. I think they've re-optimized the balance sheet. And end 2018, we'll see a very significantly strong set of full year earnings, in part because they will be lapping a soft 2017. They had to play defense in 2017, evidently. This is some photographs of art from the executive floor at the Standard Chartered Bank, just not too far from here. NIC Bank reported full year earnings per share declined 4.284%. Loans and advances to customers expanded 4.625%. Total assets were up 21.665%. Interest expense up 11.523%. Total operating income down 7.722%. Profit after tax down 4.295%. EPS down 4.284%. Final dividend 1 shilling a share, which means they actually cut the dividend payout because they paid an interim last year. And they've announced a 1 for 10 bonus issue, which will keep it supported. So Basically, it's trading at a PE of 6.25 and a price to book of 0.7. They are clearly a tier 2 outperformer, and 0.7 price to book looks very inexpensive. The bonus will underpin the share price. It's an attractive higher beta prospect. They had to play defense in 2017 and played it effectively. 100 million shillings is traded weekly in Bitcoin in Kenya. This is John Karanja, the founder and consulting lead at BitHub Africa. Britam reported full-year earnings per share was down sharply, down 79.635%. It is down as a share, down 3.37% year-to-date. Full-year gross earned premiums, that was up 14.81%. They reported a net loss income from investment property, a net loss of 607.26 million versus plus 991 million previously, so that's interesting. Insurance claims, that was up 22.66%. Profit before tax was down 79.575%. Earnings per share down 79.365% at 26 cents a share. They're paying 35 cents a share dividend. That's an interesting development. Total assets were up 18.39%. They're saying that, total comprehensive income was up 143%, and total income was up 24%, and that they're talking about this gross premium valuation method versus net premium valuation. Impact of this in 2017 is an increase in net insurance benefits by 150%. Assets under management was up 18%. Regional businesses contributed 2.7 billion shillings. Equities returned fair value gains of 3.4 billion shillings compared to minus 3 billion in 2016. Investment income from dividends and interest was up a whopping 19% to 5.1 billion. Stripping out the effect of the change of methodology from NPV to GPV, it was in fact a strong performance. The adjustment in real estate was interesting. The NSE rebound was material. Kakuzi reported full-year earnings per share increased by 5.192%. The share price is up 9.422% year-to-date. Full-year sales were up 6.515%. Gross profit up 3.832%. Profit before tax up 12%. Profit after tax up 5.195%. Earnings per share up 5.192%. Dividend per share up 16.667%. Pre-tax profit of 849 million shillings versus 759 million shillings last time. Increase in profit as a result of continued market demand for avocado and macadamia throughout the year. Profitability within the tea operations continue to reflect the difficult trading conditions and significant inflationary pressure on labour and other production costs. Final dividend 7 shillings a share. They are in a sweet earnings spot, in particular because of an early pivot to avocados in the 21st century millennial economy. Have a look at my article, The Crypto Avocado Millennial Economy. This is segmental reporting. Avocado sales constitute 64.332% of Kakuzi's total sales. 22nd of January, I wrote about the millennials with their avocado eating and cryptocurrency trading ways. They're just as likely to be African as they are European or American. Kenya Airways would benefit from the political handshake dividend, I told the Financial Times. The last thing I would say is we're out of trouble, Mr. Mikosh. This is Kenya Airways. It will take another 2 years of growth and cost control before we can say we're more optimistic. I said Kenya Airways would benefit from the political handshake dividend, but said I was still concerned about its short-term prospects. I don't think Kenya Airways has been left with financial firepower to take on the competition and expand where they need to. I'm talking about the balance sheet. I think the banks took it. Kenya Airways, this is a tweet from Mr. Sunil Sangha. KQ results not available on your website and those circulated through. Pages missing include the statement of financial position, the balance sheet. Uber denies report it will test unmanned flying taxis in Kenya. Kenya's largest companies by market cap: Safaricom 1.23 trillion, one; EABL 201 billion, Equity Bank 198 billion, third; KCB fourth, 153 billion. Then we go to Co-op Bank at 112 billion, which is fifth; Stanchart 73.5 billion, sixth; BAT 7, 72 billion, 8; Barclays 67 billion, Bamburi 9th, 65 billion, KQ 10th, 64.5 billion. Nairobi All Shares up 11.96% year to date. It's closed at a record every single day this week. NSE 20 up 3.76% year to date. Once again, thank you for stopping by. Wishing you a great weekend.